Good afternoon, ladies and gentlemen. Good afternoon. Hope you're all doing well, team. We'll just get underway and start the session off. See what things are occurring. So, just so everyone is fully aware and most importantly remembers, it is the 30th today, which means it is the last day of the last week of Q3. Last day of the month, last month of the quarter. And I know I've been singing this theme for ages and I keep sounding like a broken record, but I really do need to drive the importance of this cyclical time of the year home, because we should not be expecting anything from the markets today. It is, statistically speaking, not just this day of, September, but whenever the day occurs, it is the worst day for trading in statistical history. And so therefore we do need to be very, very vigilant with how we approach the market. So I think for the most part we've seen some pretty decent momentum, some pretty decent trading volumes, I would say, in certain assets. I don't think this UK FTSE's I don't think it's been too bad. For example, just looking at this one, and I was looking at the DAX as well. The DAX was actually okay as far as one of our shorts were concerned this morning. This actually played out quite nicely and has already, potentially achieved one of the variable TPs that we had. So it's not been too bad for little intraday setups, but it's not been absolutely mind-blowing. I mean, the FX space at the moment in terms of our basket of assets here, I mean, look at the wall of green. It's not exactly like things have been moving exceptionally well, but it is a wall of green. So we've been seeing a lot of things come off as well, ever so slightly. Lots of things sort of range bound, grinding along sideways. Had a lot of this kind of motion at the moment of just sideways price action. So this is very, very cyclical. This is the kind of price action that I am, talking about in general. This is the kind of thing that we're expecting to see at this time of the year. And so, this is when I'm saying, we have to be careful. And probably best not to really be in much. This is exactly what I'm talking about. So it's not going to be a hugely deep, robust session this afternoon, just because I want to get today out of the way and put Q3 behind us, and then look to really set us up with a completely fresh, clean slate tomorrow, and then look to move forwards with the Q4, the last quarter of the year. So things to, I'll do a quarterly recap and stuff tomorrow as well, and on the contrary, actually, I'll do the quarterly recap now, and then tomorrow we'll be looking at the next quarter's sort of major events, do a bit of a preview of what to expect in the coming months and stuff, because it is going to be pretty jam packed. We've got lots and lots to look forward to as traders over the course of the next, maybe 8 weeks, 6 to 8 weeks or so, before we get to Christmas time. So, final thoughts then, really, on September. I mean, September itself has been okay. I wouldn't say it's been, absolutely incredible. I do have the old track up and running here. So as far as the track's concerned so far, September has seen, September has seen pretty decent gains. So I'm not going to I'm not the opposite of sugarcoating. I'm not gonna go on about it, but it has been okay. The monthly return is at 19.72% so far. So that's actually, all things considered, that's actually really freaking good. But it hasn't come without its headwinds. Definitely seen major reductions in things like trade win-loss ratio, which has been falling consecutively. I would say probably week on week we've seen declines in the win-loss ratio of the positions. So the fund has definitely hit a headwind of a sort. In terms of the quality of the positions that we've been taking, I still think they've been relatively good. Risk reward ratio has ultimately saved us. The risk management side of things is, as it always does, it just outperforms pretty much every other aspect of the markets, which is good to see. Obviously, still being incredibly resilient. Looking at the positions themselves throughout the course of September, I mean, definitely to look at from initial glances, it's been a real mixed bag. We haven't really had any major winning streaks per se, but we've definitely had losing streaks. We often will get a losing streak of 5. We've had a couple of losing streaks of 7 trades in a row. That have all been losers, and we've had to weather those storms. But because of the way our fund's risk management strategy is set up, of course, we don't really need too many wins to offset the losses. So and that's the great thing about it, right? If you get a couple of 1 to 2.5s, then you're basically going to wipe out 6 to 7 losses. As simple as that. So they just, it gets to a point where losses just start to phase out. They just don't matter anymore. And we've definitely seen that. I mean, the loss from this point on, I mean, I would say the first 100,000 that you do is always going to be the toughest. That's going to be the worst. But once you get up above the 100k mark, things just start to kind of melt away, which is why when you get the ultra high funds, the ultra high net worth funds, you're looking at upwards of, let's say, 250 mil. It's impossible for them to lose money. When you get to that kind of level, all you do is make money, and it becomes incredibly easy. And I think it's probably similar to a lot of industries. I would say not so much in industrial industries. Obviously you can plow a shitload of money into something, and if the project doesn't end up working, then you're going to be out, and unfortunately you're going to have a pretty cold walk home. But especially a lot of the finance industry, the more money you have, the more wealthy you are. You'll become, from that wealth, the more wealth generation will take place. And it is very, very much like that in the capital markets, definitely. So, in terms of the financial return itself, we did 19.72% in September versus 32.2% in August, which was our record breaker, like crazy month. But in actual fact, the financial returns in September are 63,300 versus the August returns of 78,000. So actually, September is less than 15,000 away, 15,000 quid away from August, and yet we did, so much more in terms of percent return. But I mean, yeah, like I say, it's not all been simple and easy. The markets have been extremely temperamental, lots and lots of sideways price action. We've also seen, I personally believe, an increase in fake outs, where the markets dipped down or just rallied short, for a short period of time into a stop loss, or some provisional area that we've pulled the stop up to or away from, whatever. It's trigger our stop losses, and then it goes to target. I've also seen what I believe would be an increase in trades almost reaching target and then traveling all the way back down to their stop losses. And this isn't just, I'm not talking just about, stock market trades where we're in and out of the market in the space of 15 minutes. I'm actually talking about longer term trades as well, trades that we've been sat in for 3 days, and we finally reached the target profit. We're within a stone's throw away from our targets, and then we wake up the next morning and it's traveled all the way back down to stop loss, and things like that. And we've seen a lot of that in September, adding obviously to the decline in the win-loss ratio. So I suppose things to watch out for from an improvement perspective coming into into October, and then into November, is really where that win-loss ratio ends up bottoming out. Are we ultimately heading for the 50-50 law of the large number figure? Is that where we see it bottom out? Does it go further? Do we end up over the course of another year see our win-loss ratio dip down below the 50 line? Do we see that coming into sort of bottom out around the mid-40s? What does that look like in terms of our return? Also, the other thing to bear in mind at this kind of value, I mean, the fund now, the total figure sits at 384,286. When we get up to £500,000, the risk parameters change. And so therefore, we're not going to be considering 0.25 to be our maximum risk per trade anymore, and we'll actually be bringing that down to 0.2. And then high risk scenarios will be 0.15. And the whole thing will take like a step down in risk, but that's because we have such a larger value, in the portfolio. We'll be bringing that down. So I guess we'll have to navigate that, because obviously a lot of you guys that will be catching up on this stream in a few hours will be, still on your 100Ks or whatever, and you still be wanting to trade 0.25s, and that's absolutely fine. But you will probably see from a track record perspective, for me, that you'll start seeing 0.15s and 0.2s being the new mean, the new median for where our positions are at. So, yeah, things to watch out for then, I guess, in Q4, beginning of October, heading into November. Trade win-loss ratio, I don't ideally want that, and this is not from an egotistical perspective whatsoever. This is, from a proper fund management perspective. I don't really want that dropping down below 54, and so I've still got a 4.84% marginal difference there, where the price can fluctuate. Not the price, sorry, the figure can fluctuate. I don't really care about anything above, so long as it stays above. There's not some kind of high target that I'm looking for. I just want it to stay above 54%, which would be pretty much the sort of median I'm looking at for that. I think in terms of, areas that I personally as a trader want to improve on is probably being cautious about complacency with spotting my cash-rich areas in the market and looking at cash-rich versus cash neutrality. I think I probably have become a little bit complacent in my zoning. It's the only real thing I can rationalize to the trades that I've seen, which have been sort of dipping down below or above an area and catching me out before going to target, and also the increase in trades that have nearly hit a target profit. Because once is nothing, twice okay, just a coincidence. 3 times, if that happens, it's a pattern. Okay, now the markets are going to treat cash-rich, cash-neutral areas the same forever. They will always do that, because that's the way they are. And that's the way they are generated. So we don't have any fear that this is going to just stop working randomly. It's almost impossible. Once we get to the eras, down 25, 30 years down the line, where it's just AI that control the markets, how are AI going to control the markets? Well, they're going to control it with supply and demand, right? Because they're going to find those areas in the market, and they're going to do their best to, manipulate price action away from them or into them. So I would like to think, at least at this stage, that we will still continue seeing that kind of rollout and that work. So it falls down to me really to be able to iron out the wrinkles that I've faced from the fund's perspective, at least over the course of September, with these nuances happening what feels like repeatedly. Obviously, there's no point being hard on ourselves, and in the fund's performance for the sake of its community, i.e. you guys, is still done very well. But it could do better. And if it wasn't for a lot of these instances of these stone's throw TPs being missed and then heading to the stop losses, we probably would have been up at the 25 to 28% this month, which is just freaking incredible, really. I mean, we're not aiming for that. We're aiming for 10%, maybe 8 to 10% or so, which is, doing really well in itself. But yeah, so I think that's just some food for thought there, really. From a personal perspective, more than anything. And then, of course, the other thoughts, the reflection, are more sort of business orientated. What I'm aiming for the business, and I'll probably just keep them to myself until around Christmas time, when we have a big heart to heart and we have a UTC party. But I'll approach that subject further down the line. So yeah, so that's that really. In terms of the charts today, then, like I said, I haven't really got too much to say. I don't even want to, tease myself looking at the FX space right now. Just because I want today to get out of the way, and then we can really start afresh tomorrow. First day of the month, first month for Q4 2024. And I just wanted to sort of have a real nice deep dive tomorrow and look at long-term projections, short-term goals, next couple of weeks and stuff like that. And we can do all that tomorrow. So I will just be covering off the US markets this afternoon, having a look at those. To be honest with you, I don't even want to look at the commodities too much either. There's nothing really to say. I mean, this is just pretty crappy, isn't it? Gold had a relatively decent move this morning, but no better than the European stocks. And in actual fact, you probably would have been better off trading the European stocks, I would have said. When was that? Yeah, that was on Friday evening, wasn't it? Right. So what we've actually had this morning in actionable trades is this leg here. And that leg there was blocked off by this low here. So in actual fact, you probably had this leg here. From the 8 a.m. breakout, we broke structure. So you probably could have looked at a potential entry in there. And that was your lot. That was your lot. Definitely a trade that was, you had the capacity to take it, but it's not very good. It's not doing very good. So let's come down then. Let's have a look at these US stocks then. The US stocks this afternoon, in terms of the potential for setups, not great. I have to admit that they're just not looking that great. The breakouts that we had on Friday, by the way, were freaking crazy. These US 30 Dow Jones just absolutely powered up. And if that wasn't good enough, we actually had a counter breaker structure all the way back down again. It was a fantastic trading day. The NAS 100 was okay. No, I'm not even looking at the right thing there, am I? Yeah, no, the NAS 100 was non-existent. Yeah, that was the NAS 100's breakout, like somewhere here, wasn't it? Yeah, that. that little thing there. There you go. That's the US tech stocks breakout. Fantastic stuff, eh? So that's that. The US 30 Dow Jones, just a complete and utter different kettle of fish last week. Really good. That being said, look at what we had to deal with beforehand, because the 2 trading days before that, or at least the 24 hours before, were just shite. We did get a good opportunity on the Wednesday afternoon for that sell-off down to liquidity, which is where we took a couple of wins there on the shorts as per the plan from the afternoon session on Wednesday. But yeah, we really did have to suffer the consequences of that for the next 24 hours after, until Friday when we got that really nice big surge. I didn't trade on Friday, by the way, guys. So yeah, I was completely out, as you can see from the chart here. It's completely clean. But yeah, really, really nice price action anyway. So let's remove all the drawings then. We can remove from both of these. NAS has already been cleared. That's fine. In terms of what we're looking at to trade today, it's not too easy, I don't think, to really depict what we're looking at here. So we've got a floor. We had a fake out so far. Anyway, we've got a failed retest, it looks like. The real element for me here is probably going to be at that sort of midpoint there with those two lows. So I want to include that. So actually, if we're looking at that, based on these lows, we're still trading underneath this point of liquidity. And that there is representative of a fake out itself. So then looking at long TPs, ideally we're probably looking at about there for a breakout. This is by no means great, guys. Okay, it really isn't. The margin is incredibly tight, but that is just what we've got to work with today. So looking at the breaker structure for this one for a potential long, you are probably looking at this area in here for your breaker structure point, and then you're looking at the TP up there. So very, very tight trading margin. It's not impossible to navigate, of course, but it's not going to be superb. So if you have your TP up at around that area there, you're looking probably at about this point here being your breaker structure point, which means then you probably have your entry a little bit lower, your stop loss lower there, and that one's going to yield you a 1 to 2.6-ish. So that's not looking too bad. This is all no man's land in this space. Your short for this one is definitely going to be the breakout underneath the extreme low. So that's down there, that one. So if we go back up to the 15-minute time frame and check this one out, and then you'll probably be looking at this area in here. So just increase the width on that a little bit, bring that one across, and so that's going to be your short. So if you look at that on a 1 minute time frame, you've got the breaker structure down here, target profit, stop loss. You won't have the stop at the 50% point between these two zones because that's overkill. So just so we wrap this up and we make it nice and clear for everyone, you're probably looking at around that for your trade, and that'll be your lot. And then this entire space between this breakout and that breakout is all NML, the entire thing. So you won't be trading anywhere in there, which makes this kind of difficult to navigate in a sense because we have such a large period between these two, and we need to be waiting simply to capture the final run to the upside or the final run to the downside. Now, if we look at the Dow Jones, in terms of the floor, is probably a little bit better. So if we go to the 15-minute time frame, look at the floor, that's actually really tidy. So really, really nice point of liquidity there. Obviously, prior inflection point, retest, continuation. We come back down. This is now the new floor. We've got these two lows in here, similar to the NAS 100. So I'll probably increase the width just to touch on that one. So we are looking long the Dow Jones from where we're currently trading at the moment. The most likely outcome for this one, taking all factors into consideration, is likely going to be the previous high on that little run there. So that's going to be your trading margin for the long, and for the short, very much the same thing again. Probably looking at this area here is your sort of short trading margin, considering, and based on what previous price actions told us. So then if we go back down to the 1 minute chart, breaker structure point for the long for the US 30 Dow Jones is going to be in this area in here. So that's going to be your BOS area for your long. And then for your short, you're probably looking at around this area in here. Okay, so this is your no man's land. So the US 30 Dow Jones has a significantly smaller NML than the NAS 100. Significantly so, as you can all well see. So the target profit for this one's all the way down there. You are going to be able to give this one a much nicer stop loss because of how small the NML is. So you will want to do that. So I would probably go from maybe a 1 to 3 to a 1 to 2.8, anywhere in between there, and give you that sort of space to work with. Your levels of liquidity in here are quite decent as well. I would say this one's quite nice and strong. So if you increase the width to include both of these lows, then you actually see that the stop loss does decline in its margin quite a fair bit. So if we drag that one back in time there as well, this just makes real sense. Excuse me. For for the Dow Jones. This, hopefully this will be done and dusted very quickly if it does decide to go long, and you'll be looking at about that. So I want a 2.26, and yeah, that's what you'd be expecting, really. There's nothing more I would say on it. I would probably, this no man's land is huge, and there's so much that's happened in between these spaces. So I would probably, if push came to shove, be favoritist of the US 30 Dow Jones today for your trading, and not necessarily the NAS 100. I'm not telling you not to trade the US tech stocks, but ultimately I think the Dow Jones has the cleanest setup, and so that's what I'd be focusing my attention on. And that's that. That is that, guys. This will mark the last trading session of Q3 2024, and that's how I'd set it up. That's how I'd play it. So yeah, probably going to wrap things up there. TJ, buddy, you got any questions? If you don't, absolutely fine. If anyone else has got any questions, for those of you who are watching this session a bit later on, please don't hesitate to ping me a note inside the Traders Lounge, and I can go through anything with you. That's absolutely fine. If there's no further questions, I'll wrap things up there. No. Okay. All right. Well, I'll tie things up there then, guys. I hope you have a good day today. Don't get too disheartened with the price action this afternoon. I really, really don't think it's going to be any good. So just, play it safely. Only take what meets every aspect of what you're looking for. And we'll catch up in the chat this afternoon and then get ready for Q4 of 2024. So trade safe, guys. Have a great afternoon, and I'll catch you then. Thanks a lot. Bye-bye.